Attention, Degens! This week in crypto was absolute madness. Wild crashes, whale moves, geopolitical shockwaves, and a meme coin trying to flip the entire financial system upside down. If you blinked, you missed something. But don't worry, this isn't your average boring recap. We've got the biggest wins, the craziest news, and the real alpha from the past 7 days. Buckle up. This is the weekly Degen download. Headlines: Bitcoin tumbles near $100K after Middle East tensions spark sell-off. Is a bullish Bitcoin fractal from 2024 repeating itself? Analysts say yes. Could Solana hit $300? Odds of a spot ETF approval just spiked. Bitcoin surges as Trump says the U.S China trade deal is done. Ethereum hits all-time staking high as ETH breaks past $2,700. News breakdown. News number 1. Bitcoin nears $100K. After Iran-Israel escalation, Bitcoin faced a sudden and brutal drop late Thursday, plunging to $103,000 after Israel launched airstrikes on Iranian soil, igniting fears of a broader regional conflict that sent shockwaves through global markets. According to reports, explosions rocked Tehran around 22:50 UTC, and within minutes, social media lit up with unverified footage of missiles and sirens. It was later confirmed that Israel had carried out the strikes, a serious escalation in the already fragile Middle East tension. The crypto markets reacted swiftly. In just 90 minutes, Bitcoin dropped nearly 3%, sliding from $106,000 to $103,000, erasing billions in market cap as investors scrambled to de-risk amid the chaos. But here's the interesting part. Despite the sharp move down, BTC didn't break. Instead, we saw a rebound toward $104K, showing early signs of buyer confidence and suggesting that some investors are treating this as a buy-the-dip opportunity, not the start of a major crash. One of those voices was Samson Mow, founder of Jan3 and longtime Bitcoin bull, who took to Truth Social to tell GameStop CEO Ryan Cohen, "This is where you buy." A bold statement, and maybe more than just a meme. Historically, Bitcoin has shown a remarkable ability to recover from geopolitical shocks, especially when those shocks trigger short-term liquidations but leave long-term fundamentals intact. Some analysts believe this could mirror previous events, like the 2022 Russia-Ukraine invasion, where Bitcoin initially dropped, only to recover and rally past previous resistance levels. That said, volatility is likely far from over. If tensions between Iran and Israel escalate further, traditional markets and, by extension, crypto could be in for more pain before relief. The question is, are we looking at a classic liquidity flush before the next leg up? Or is this just the tip of the iceberg in a larger geopolitical event that could weigh down risk assets for months? Either way, smart money is watching closely and possibly loading up. News number 2. Bullish fractal could push BTC to $150K. While retail traders panic sell on red candles, some analysts are seeing deja vu, and it's bullish. A growing number of market watchers have pointed out that Bitcoin's current price action mirrors a fractal pattern from late 2024, just before BTC launched into an 80% rally that took it to all-time highs. So, what's the setup? It starts with liquidity grabs, sharp price drops that flush out leverage and trigger cascading liquidations. Then comes the rebound, usually fast and aggressive, as institutions and whales scoop up cheap BTC while the fear index spikes. Sound familiar? That's exactly what happened this week. BTC dips on geopolitical fear. Liquidity swept under $104K. Bounce follows within hours. Analysts are calling this a bullish rejection, a failed breakdown that traps bears and builds fuel for the next leg up. But there's more. Macro tailwinds, including softer inflation data, dovish central banks, and a growing narrative around Bitcoin as a safe haven, are adding pressure to the upside. Whales are accumulating, too. On-chain data shows large holders increasing their stacks, suggesting confidence in a long-term move higher. The boldest projections? A $150,000 Bitcoin in 2025, not based on hopium, but on chart structures, supply squeezes, and rising demand from ETFs and institutions. Yes, it's a big number. But if this fractal holds, this correction might not be the end. It could be the launchpad. News number 3. Solana ETF odds and $300 target. Solana is making waves again, and this time, it's not just retail hype. We're seeing a coordinated surge across multiple fronts. In the past 24 hours, SOL is up over 4%, currently trading at $165. That's still well below its all-time high of $294, but the momentum is undeniable. So what's fueling this rally? First, ETF fever is spreading. Analysts now place the odds of a spot Solana ETF approval at a staggering 91%, a number that would have seemed absurd just months ago. The increasing regulatory clarity and growing interest from asset managers have pushed Solana into the spotlight. At the same time, open interest in SOL futures just reached $7.54 billion, only 12% below its January peak. That's not just traders betting on price action. That's heavy institutional positioning, signaling long-term confidence in Solana's ecosystem. But let's dig deeper. Solana is one of the few chains that's not only fast and cheap, but also showing strong on-chain growth, especially in DeFi and NFTs. It's regaining credibility after the FTX collapse, and institutions are paying attention. A successful ETF approval could trigger mass inflows, just like we've seen with Bitcoin and Ethereum ETFs. And when you combine that with already rising leverage in derivatives markets, the setup is there for a potential breakout. Of course, high open interest also means higher volatility, so while $300 might be in sight, the road there could be bumpy. So here's the question. Will a Solana ETF push SOL past $300, or are we heading toward an over-leveraged correction first? Drop your take in the comments. News number 4. Bitcoin and U.S. China deal. Bitcoin is edging closer to a new all-time high, and one of the main drivers is something far beyond the blockchain geopolitics. On Wednesday, former U.S. President Donald Trump posted a striking update on Truth Social, claiming that the long-anticipated trade agreement between the United States and China is essentially finalized. His exact words: "Our deal with China is done pending final approval from President Xi and myself. We get 55% of the tariffs, China gets 10%. The relationship is excellent." This announcement caught global markets by surprise. Why? Because for years, the U.S.-China trade war has been a major source of uncertainty not just for traditional markets, but for crypto as well. Tariff hikes, supply chain disruptions, and political tension have created an environment where investors flock to risk-off assets. But when major powers strike deals, capital flows tend to shift, and Bitcoin, once seen as volatile, is increasingly viewed as a hedge against macro instability. Traders and institutions alike are now positioning for a potential post-deal rally, where renewed global cooperation could boost appetite for high-performing alternative assets, especially BTC. And here's something interesting. Historically, Bitcoin has often rallied during or after key geopolitical easing events, especially when they lead to a weaker dollar or stronger emerging markets. With the dollar potentially softening on improved trade conditions, BTC could benefit in two ways: more global liquidity and reduced investor anxiety. So, the big question is, if this US-China deal goes through, are we about to see Bitcoin enter a whole new bullish phase, or is this just a temporary relief pump? Let us know what you think in the comments. 5. Ethereum breaks staking record as ETH tops $2,700. Ethereum continues to demonstrate its resilience and growing dominance in the crypto ecosystem. This week, Ethereum hit a significant milestone by setting a new all-time record for the amount of ETH staked on its beacon chain, the underlying proof-of-stake network that secures Ethereum after the merge. More than 34.6 million ETH, representing nearly 30% of Ethereum's total supply, are now locked in staking contracts. This is a major indicator of long-term confidence among holders who are willing to lock up their assets to support the network's security and governance in exchange for staking rewards. Simultaneously, the price of ETH surged past $2,700, reaching a 12-day high. This price movement has been largely driven by increasing accumulation from institutional investors who see Ethereum not just as a platform for decentralized applications, but also as a valuable digital asset with strong growth potential. The combination of record staking and rising prices creates an interesting dynamic. More ETH locked up in staking means less liquid supply available for trading in the open market. This reduced supply can create a scarcity effect, putting upward pressure on prices, what some analysts call a bullish pressure bomb. All eyes are on Ethereum now, asking, is this the start of its next major price rally, potentially pushing ETH toward the $3,000 mark? Given its technological upgrades and growing institutional interest, many believe it just might be. That's a wrap on one of the wildest weeks in crypto yet. BTC nearly hit $100K, then surged back. Solana's ETF chances are climbing. Ethereum just smashed staking records. Trump sent shockwaves through global markets. Now it's your turn. Which story got your pulse racing the most this week? Let us know in the comments. Don't miss a beat, smash that subscribe button, ring the bell, and we'll see you next week on the next edition of the weekly Degen download. Stay sharp, stay Degen.